Hello everyone, happy Sunday. Make sure to like the video, comment, subscribe, do all that good stuff, because in today's video we're going to talk about what the next steps are in the market, why I wanted to go short, and why basically I ended up working out intraday on Friday, even though many people didn't understand the reasoning behind it. So in today's video I'm going to explain why and what the next steps are, in my opinion, for the market. All right, we're also going to we're going to talk about earnings for next week as well. All right, so without further ado, let's get started with the video. All right, so this week, banks and economically sensitive stocks are going to continue having earnings this week. And then we have very important earnings with Tesla and IBM Wednesday after the close. Basically, we saw on Friday that JP Morgan and the other banks that had earnings on Friday, they beat their earnings estimate. So that stopped the banks from having a complete capitulation. And Friday also, the banking sector did pretty well, right? And if the banking sector did not do that well, then the overall market would be much lower. So we're going to continue seeing how these banks are going to do with earnings. Netflix also has earnings Tuesday after market. So it's a much more packed earnings week, definitely this week. In terms of economic data, this week is going to be a bit softer and easier to trade. These are generally the weeks that the market trends and is usually easier to trade. So we're not going to have that much news this week. Monday, pre-market, we have the Empire State Manufacturing Index. Tuesday is pretty dry. Wednesday will be pretty dry. Then Thursday, of course, we have unemployment claims. Then we have home sale data coming out at 10 a.m. with some Fed members speaking this week as well. But then after this, there's going to be a period of time essentially where there won't be any Fed speeches for a while. So that should be fine. And then Friday morning, we have PMI data coming out. So overall, Monday, Tuesday, Wednesday, completely dry days in terms of intraday price action, in terms of like news. So, generally at this, for example, on Friday, we have news at 9:45 a.m. We don't want to hold anything Friday, during this time. So we don't want to really hold any short-term positions during this time, because the market can fluctuate extremely high or low. Things can jump. So Monday, Tuesday, Wednesday, we don't really have to worry about that, which is great. So there's that. So next, as you know, I was showing how Microsoft was a big reason why I was leaning a bit bearish on the market. Clearly, Thursday we saw a big green candle. The entire market should have been very, very bullish, right? It was a big green candle. We closed above these levels of resistance. Great, right? But I showed that Microsoft on a 1-minute time frame was creating a rising wedge. And rising wedges are extremely, extremely bearish patterns. So this was Thursday. We could clearly see that we showed like a very big rising wedge here, and rising wedges, once again, very bearish patterns. So we never reclaimed. This was basically a perfect, basically like I was right, and Microsoft helped pull the rest of the market down. So basically, if the fact that Microsoft, after a big green candle like this, was creating a bearish pattern, it was very relevant to look at for the rest of the market. And basically, that's why we see Microsoft continue to fall and the rising wedge broke down lower. So say, for example, we did create a rising wedge. For this to break even higher would take an enormous amount of buying pressure. So it is very, very unlikely that that would have happened, which is why I was leaning bearish, because if Microsoft was going to pull the market down, Microsoft is a large tech company. Tech in general was going to take a hit. The only thing was that the IWM, the banking sectors and the banking stocks held the market up higher than they should have been held. But if the banks didn't do well, then the entire market would have completely just been massacred, and we wouldn't have held 410 on the SPY. But overall, I just want to quickly share this Microsoft update with you guys, and it helped give us proper direction on the market. So that's why it's very important looking at large tech stocks and large stocks that move the market, not only on a daily time frame. You also have to look at them on an intraday time frame on smaller time frames as well, because then it helps you see which direction the market is going basically. Next, so this is the daily chart of the XLF, which is the financial sector of the SPY, and you can see we gapped up, and you can see that these other garbage banks did really well, and unfortunately which helped you know, if it's unfortunate if basically the banks didn't do well either, then the overall market would have like really fell. The shorts would have printed even more, but you know, they still did well. We were short and the market ended up falling from 413 to 410, but these damn banks, they held the market up, so it is what it is. The IWM, you could see, is still trading basically. Sorry, actually, before I talk about the IWM, I want to first take a look at the main stocks that were basically driving a lot of this push in the market in terms of retail. So Walmart, Target, HD, these other stocks were basically really rallying, which the rest of the weakness in these other sectors were overlooked because the strength in these big movers, right? So now what we're seeing is Walmart, for example, is continuing to make newer lows and it's showing weakness, right? So if this 148 level breaks, and then especially if this 146.50 level breaks, then a lot of the upward momentum would have subsided. But you know, this 146, 145 level is going to be very important for a bounce. And then when we look at Target, similar to Walmart, basically, like, these are not really healthy moves to the downside. This is basically showing weakness, right? And granted, you know, this is still technically in a bull flag. We're still holding above levels of support, right? But immediately, this is not something that we want to see in terms of a bull structure. So it's important to take that into consideration when we look at, you know, the overall market. And it's very important to look at these different stocks to get a better understanding of, you know, which direction everything is going to go in. The same way that we have to look at the large tech stocks to see the overall trajectory of the market, we also have to look at these, like, the movers that were the biggest movers and what they're doing now. So yeah, and we also have to realize that there are instances in the market where money rotates in and out of winners and losers. So that's another thing. But essentially, right, before I talk about the indices, right, I just want to share that. And now I guess what we should first do is I want to take a look at the VIX. All right, so this is a daily chart of the VIX, and clearly, so first of all, we know that the VIX has an inverse relationship to the market. So if the VIX is falling, that means that the overall market is showing strength or is rising, right? So clearly, we can see that the VIX is showing a lot of weakness, and we haven't been this low on the VIX since back in January. So clearly, things are showing a lot of weakness, and weakness in the VIX means that the market should be going up. Cool, right? We could also see that the MACD indicator on the VIX is falling lower as well, and it's showing that we're about to have a cross down below. So if we do get a cross down below, usually it means after the cross, the momentum is continuing to fall lower, and after the cross, we should have at least 1 to 2 days of neutral to bearish momentum on the VIX. So this is clearly showing that, yeah, like in the short term, the VIX is still showing weakness. We could see some more weakness in the VIX, but this is very low. The VIX rarely ever gets down this low. And if it breaks down, if it breaks down these lows, then we're coming back all the way back to December of 2021 levels on the VIX. So it's very difficult basically to be long on the stock market when the VIX is this weak, right? It's much easier to, I mean, technically, right, the VIX should be bouncing off of support, right? If it breaks down below 17, okay, it could fall down 16.5, it could fall down to 16, right? But from a risk reward standpoint, the market is getting overextended to the upside, according to the VIX as well. And I would basically be leaning, You know, the momentum in equities is clearly bullish, right? Things are holding at support and they're bouncing and everything, but I was leaning short, not because of the VIX, right? But now the VIX is also helping the short. The VIX is basically also going to be helping the bears. This is a very, very extended. This is, I mean, it can't really sustain itself to the downside. Maybe another day or two, but yeah, we could probably fall for another 2 days. We could consolidate for a day and then fall down for another day or two. But this is it's starting to get a bit more difficult to be extremely, extremely bullish on the market, especially when the VIX is showing this much weakness and falling and cracking through levels of support. Because generally when that happens, once we get to these levels of support and things get very overextended to the downside on the VIX, there's usually a big snapback on the VIX. And once there's a big snapback on the VIX, that means that the stock market should fall. All right, so keep that in mind. The VIX is showing a lot of weakness. All right, so keep that in mind. All right, so now this is a daily chart of the SPY. All right, and we can see three main trend lines here. Number one, a downtrend starting from August. So August, we acted as resistance again back in February, and now we are at this same trend line here acting as resistance. Okay, so this is one level of resistance here that we're currently at. All right, number two, an uptrend level from October. So October, all throughout December and January, this was acting as support, and then basically if we were trading above it, it was acting as support, and then once we traded below it, you can clearly see that back here, right here, let me zoom in right here. Right here, we failed to cross above in the beginning of March. We failed, right? We tried to break above, but then we had a big reversal candle right here, and that basically showed us that we weren't going to break. That was not going to be the instance of when we broke above that trend line, and then we continued down for 2 more days. And then, you know, once we continued, we bounced back, and this level continued to act as resistance back in April, and we fell again lower, and now once more we are back to that same exact upper, basically this uptrend, and it's acting as resistance. So for tomorrow, this level is going to be 414.50. So that is going to be the resistance level for this downtrend. So basically, as you continue touching these levels, right, here, and now once again we're touching it again, what needs to end up happening now is we need to start breaking above it. And if we don't break above it soon, right, what's going to end up happening is this is going to just remain intact, and the price is going to start falling. And once the price basically starts falling lower, it's going to take a long time for us to regain and retest that trend line once more. Similar to basically what happened back in March. We had a big bounce, and it took some time to basically get the retest of that trend line. So basically, we need to see if we can break above 414.50 on Monday, and that would be us reclaiming the trend line, right? And then to top it all off, when you make a trend line from the middle of March and you connect it basically along the lows, this ends up forming a rising wedge pattern, similar to what we saw on Microsoft. So once again, rising wedges are very bearish. What we saw on Microsoft was a rising wedge pattern on a 1-minute time frame heading into major resistance. Very, very similar to what is currently going on the SPY. We see a rising wedge pattern heading into major levels of resistance once again. So this is not really a bearish situation that we want to see. It's not the best bearish situation, to be honest, at all. But what we could do, right, if you don't want to be bearish here, which, I mean, it's, you know, it makes sense to be leaning bearish 100% in my opinion, because you can basically be leaning bearish with a stop loss above this high. And I personally also, I would be very, very surprised to see if we could get a break above this February high as well, given the weakness that we see in the IWM. and I don't see the IWM stocks really recovering to a point where it pushes the SPY up above these highs. So overall, I mean, just from a technical standpoint, we're heading into levels of resistance. Things are failing, showing some indecision. I'd be very surprised. Basically, it makes more sense to lean short. So basically, another thing you could do, right, if you don't want to lean short here and you're waiting for confirmation, is you wait for this uptrend level to break lower and for a close below this uptrend level. So you just wait for a red candle, essentially. If we could break and close below 409, that would be a pretty safer opportunity to go short on Monday if we break below 409, or on Tuesday if we close below 410. Those would be safer opportunities to go short if you don't already want to, but it makes way more sense, in my opinion, to be short at the moment than it does to be long, even though we are in an uptrend. All right, so these are multiple levels, multiple reasons to, keep these trend lines and everything in the back of your mind, right? So there's that for the SPY. Let's quickly take a look at the NASDAQ. The NASDAQ is clearly still, again, it didn't get a close above yesterday's high, similar to what the SPY was doing. And again, we're not really closing above any major level of resistance on the NASDAQ just yet. The weakness in Microsoft helped keep the NASDAQ low, right? So clearly the NASDAQ is not, it's not showing an extreme amount of strength, but yes, we did hold and close above the 22.6% fib. So in the NASDAQ's defense, right, things are still holding support, but we're failing at levels of resistance. But these are good opportunities, in my opinion, to still lean short for the market, given the fact that the VIX is also showing weakness. But once again, it's important to realize that the VIX can show weakness for another 2 or 3 days, in my opinion. And if the VIX continues to just capitulate, show more weakness, then the market is either going to stay stagnant or bullish during that period of time. So, the easiest thing, right? So since right now everyone is ending up being bearish, right, on the SPY, and everyone is basically just leaning bearish, one of the easiest things, in my opinion, would be if they end up breaking a new high and creating a leg up, people will end up being very, very long up here. And the bears that are bearish over here, once it breaks above, people are going to become bullish. And that would be a great opportunity to load up on shorts for another big move down. So I think that's the type of day when we see like a big red candle. And that would be pretty interesting. But overall, you could basically be short 415. I was short yesterday at the close, and we ended up, it worked out. And yeah, there's that for the SPY. The NASDAQ, let's quickly take a look at the IWM. The IWM is not doing us any favors either. Clearly not breaking above any levels of resistance. The April highs are still holding intact, and things are still normal on the IWM. Things are still stagnating, things are still weak, and we're going to continue seeing earnings for the next few days on the IWM for the banks and the economically sensitive stocks. So keep that in mind. But overall, I hope you guys enjoyed today's video. I did not realize this would take this long. I thought it was going to be maybe like a 7 or 6 minute long video. Ended up being 19 minutes long. But yeah, I hope you guys enjoyed. Please make sure to smash the like button, comment, subscribe, do all that good stuff. Thank you guys so much for your support. And for everyone that watched the entire video all the way to the end, I love you guys, and I just want to really, really extend my gratitude for all of your support. So yeah, thank you so much, and I will see you guys tomorrow. Thank you.